Everyone, how are you doing? So in this class, I'll be talking about multiple time frame analysis. Now, multiple time frame analysis is a method of technical analysis that you can, use to get better entries in the market and, get look for places to get enter the market. Now, in multiple time frame analysis, like normally, every most traders have like three time frames they use. You have to, like in multiple time frame analysis, we use three time frames. That's one, you have to pick your main time frame, which is going to be, the one where you spend most of your time on your charts. The second one will have to be like the higher time frame, which is going to be higher than your main time frame, like the next one to your main time frame. And then you have to pick a lower time frame. That makes it three. The lower time frame is the one that will be lower than your main time frame. Now, for me personally, I'm more of like a position trader. So usually I use three time frames. I use the 4 hour time frame, which is my main time frame. Like you can see here, you can see the daily time frame and the 1 hour. So basically, seeing this, these are the three time frame I spend the most of my time. Now, I'm going to tell you how you're going to use each one of these time frames now in a minute. Now, can you see? So the 4 hour time frame now for me is my main time frame. The 1 hour is my lower time frame. Now, what's the lower time frame is used for? The lower time frame is used to take entries. Like the lower time frame, you can use to fine tune your entries. That's the 1 hour for me. And then the higher one, you can use it to take exits, look for take places to take profits. So yeah, so for day traders might use like three time frames. For example, a day trader might be using like a 15-minute time frame as his normal time frame. No, as his entry time frame. Yeah, he will use 1 hour for exit. He will use 15 minutes as his normal time frame. Then 5 minutes will be his exit, like his entry time frame. So that's three time frames for a day trader. That's 15 minutes time frame, 1 hour time frame, and 5 minutes time frame. Now for a day trader, I will use the 5 minute time frame to look for entries. He will use the 15 minutes as his main time frame. That's where he spend most of his time. Then he will use the 1 hour as the no main time frame, as the sorry higher time frame where he looks for exits. So for me personally, I use like the daily time frame for exit. So these are the major time frame I use. Now I'll let you know how we do this in a minute. Now first I'm going to start from the higher time frame, and this is actually a market that is just starting to you know that is a live market. Like this is like on the 2nd of August, yeah, 2020. So I'm going to show you what happens. Now, looking at this chart, this is where the market is right now. The first thing I see an engulfing pattern, right? I suppose everybody in this class should know about engulfing pattern now. I see an engulfing pattern. But just before the engulfing pattern, what happens? I see an hammer here. Now, as you can see, we have been on a long uptrend for a long time. Now, when I see this hammer at this point in time, I might be suspecting, okay, there might be a reversal. Now, I have seen an engulfing pattern, a bearish engulfing pattern. Now, this also suggests, okay, it's possible we have a reversal at this level, but I'm not sure yet. So now what I'm going to do is I'll go back to my lower time frame, which is my 4 hours time frame. I've seen an hammer here, mind you, and I've seen an engulfing pattern here, which is telling me there might be risk of a possible reversal. So what I'm going to do is I'm going to go to my 4 hour time frame. Then on my 4 hour time frame, that's personally where I draw most of my trend lines. So, I'll start drawing my trend line. Looking at this chart, I always told you you can draw your trend line anywhere, anyway. Looking at this chart, I think I see a trend here, a trend line here. Why is my trend line facing down? Sorry, just a minute. Style. Normal. Okay, so I can see like, okay, this is a trend line. This is like something that if you extend this trend line, you're going to see that is a level of support, supporting this trade ball. I think this one is enough to have here. That's the first one I'm drawing. So I'll zoom in and then I'll draw another trend line here. Because I want to get the earliest entry possible if this risk any reversal. So I'm drawing another line here. Can you see that? I'm drawing a support line here. Now, I said this is a market that might risk reversal, right? So I'm also going to draw a line at the top of this trend right here. Now, if you are an experienced trader, you'll be familiar with this pattern. This is a reversal pattern on its own. Now, this particular pattern is a wedge. It's called a wedge, but I'm going to talk about this more when we go to chart patterns, because in the next class I will expatiate more on it. But this particular pattern I'm seeing here, merely join this one is I'm already seeing signs that there might be a reversal in this market. Then I'm not too sure either, because this is a trend line, that is still joining this uptrend. Because this thing might just, continue from here and keep going up. So you can never be sure. So then I'll now go to a lower time frame to be sure of, if I'm doing the right thing. And on my lower time frame, if you want to check for reversal, a very good way to check for reversal pattern is, to use the RSI indicator. So I will put in my RSI indicator. I don't know if you guys know about RSI, but if you don't know about it, I'll share a video about it so you can actually learn more about it. I put in my RSI. Now, most traders use RSI. Personally, the only thing I use RSI for is to check for divergence. Now, what does divergence mean? Divergence means like the trend is getting weak. Like, we've been on a long uptrend for a while. Looking back, if you zoom back, we've been on a long trend all the way down to the past. You're going to see that we've been on a long uptrend. So, at this level, I see, where how are you going to know if this is a divergence? So, I take a trend line and I draw it here. Now, this is a perfect example of a divergence. Why? Why is this a divergence? Now, a divergence means when your trend line, like the one connecting all the highs, is going up, and then the one on your RSI, your relative strength index, is going down. So what this means is this: a risk of a possible reversal. So now I have two confirmations of risk of reversal. Now, the first confirmation I have is the engulfing pattern on the daily time frame. The second confirmation I have is this wedge pattern I saw on my 4-hour time frame. Now going to the 1 hour time frame, it's already showing me like this trend is getting weak and it risks reversals. So what I'll be doing at this level now, I will be looking for entries, and then what am I going to do? I'm looking for entries. Now, looking at this chart, broken resistance becomes support. You always, you know the rules already. I can see that there's a level of, let me go back to my normal time frame. I can see that there's a level of support here. Let me draw it so that you can see it yourself. I'm going to mark just two levels of support because broken supports become resistance and blah blah blah. I can see level of support here. So I draw this one in. Now what I'll be looking for is I'll be looking for this wedge to break. I'm not going to take any trade at this point. What I'm looking for is a break of this particular line. Then when it breaks, I'll be waiting for a retest of this particular line before I take any entry. So personally, merely looking at this, I know where I'm going to be taking my entry, somewhere around here. Let me draw it for you. Somewhere around here. Can you see that? That's why I'm extending my trend line. So if this trend, anything is possible with the market, of course, it might not go bearish. But I am most likely predicting like this is most likely going to go bearish because of the signs I'm seeing. Divergence sign right here. Sorry. The divergence sign right here, that shows on the RSI. You can watch the RSI videos to learn more about it. And then this wedge pattern. Now, why do I trade this wedge pattern? What I'm going to do is I'm going to like measure, the biggest distance in between the wedge anyway, but I don't know, you might not be familiar with that. And this is like 259 pips here. So if I'm going to take an entry, let's assume this one breaks. I'll be waiting for a retest of this trend line here. So, I might get an entry around here and then I'll measure the same 259 pips, but just not to be greedy, I might just measure, I might just take 2000. Let me see, 2000 pips. Sorry, 2000 pips. Yeah, and maybe 20, I'll take my profit somewhere around here and I'll be very good. 2000 is enough. Sorry, 200 pips. What am I saying? 200 pips is enough. And then, my take profit is just bang like that. But then I have to wait for a break of this trend line. And how do you know if a trend line breaks? Once a full candlestick breaks out of here, like breaks is formed below this trend line, then it has broken. Now, when Monday comes, I'll be spending most of my time on this 1 hour time frame. Why? Because the 1 hour time frame is where you get like the earliest of entries because of my style of trading anyway. So I'll wait for a break of this 1 hour time frame, like this same trend line, and then I'll wait for a retest of this place to take my entries, and I will have my moving average waiting at this level by the time it breaks and retraces to show me places to enter, and I'll add Fibonacci to it. So that's basically what multiple time frame analysis is about. So let's do this for one more chart before we end, like before I finish up this class. Let's check USDJPY. I have to clear my charts for you guys, man. Okay, that's my problem. Bin everything is binned. Okay, now very good. Now let's start from the daily time frame. I told you always use 3 time frames in multiple time frame analysis, right? So I have the daily time frame first. Now I'm starting from there. And as I can see, we have been on a downtrend. We are only focused on this part because this is what is happening and this is what concerns us. So we've been on a downtrend, right? And then at this point, you all of a sudden you see a very big engulfing pattern. Then I'm sure everybody knows what an engulfing pattern is. Now, usually I'm going to show you how to take entries and exits. I think this one should even be like way more better to use. So I'm checking. I've seen the engulfing pattern on the daily pattern. Now let me give you one cheat code that always works for me anyway. When you see an engulfing pattern like this, the market has been on a downtrend, and then you see a bullish engulfing from nowhere. Now, what this means, before, if you are going to buy at any level here, this is the level I'll be looking to buy. Can you see where the daily, like the high of the previous day candlestick at this level, this very level where the market like closed the previous day, where the market opened the previous day, that's where I will be setting my entries. As I'm very sure by the time I have Fibonacci and everything, you see that this level is still going to be tested before it eventually goes bullish. Why is this level going to be tested? Because we have been on a downtrend since. So many people will still assume that we are on a downtrend when it is very likely that the trend might change direction, and maybe a bullish trend begins. So I already have this level of resistance marked out here. So I'll go to my normal time frame, which is my 4-hour time frame, and then I see this pattern too. Now, when I see this, I would still be thinking about taking entries because my daily time frame is already telling me, there might be a possible reversal. So what I'll be looking for all through this chart is a sign of reversal. Now, this is my major time frame. I'm going to draw Fibonacci on it. I'm just trying to show you guys anyway. Fibonacci retracements, and find levels where the market might possibly retrace to. So as you can see, this level, 50 level. So I'm going to just shift my resistance a little bit low, and then I'll mark 50 to 68 level on my Fibonacci already. I have this level marked already. Why? Because as the market has gone bullish, I'm still expecting it to take a retest of this 50 to 61.8% zone before it eventually goes bullish. Now I'm doing this on a weekend market because the market is obviously closed now, because I'll be expecting a retest of this zone before it eventually goes bullish anyway. So now I'm going to go to my 1-hour time frame, and on this 1-hour time frame I would be waiting for a retest of that same zone. So what I will do on 1-hour time frame, I'm going to draw a trend line from here. Obviously there is like nothing here to even support that I have a trend line, but just look at what I'm going to do, and I'm going to show my moving average. So I will have this trend line waiting here, drawn across all the lows. It's a super tight trend line, but I think it still works anyway. But the trend line is a trend line. I will have it waiting here so that in case the market retests this level, can you see? This level is most likely going to be a very sweet confluence, because I can already see my moving average here. Fibonacci is already showing 50 to 68 level here, and then I have my trend line waiting. And then lastly, I see an inverted hammer at this level. So this is telling me there could be a possible reversal at this level. So I'll be waiting for this market to test this zone of resistance before I take an entry. And I won't just take an entry just to see if there's likely possible reversal. I will put in my RSI again, like I did earlier. Relative strength index, RSI. I expect that you guys should know how to like open up RSI, no, not PSI. RSI. RSI. Oh, what's going on? Sorry. Finally. Yeah. So now the only reason I'm using this RSI is I want to check if there's divergence. Now, what does divergence mean? It means the trend is getting weak, right? So we're on the 1-hour time frame, I suppose. So yeah, we have something like this. This is a line that connects all the lows. Divergence, like I said, is when your trend line is going, that connects all the lows in the downtrend. The rise in the downtrend is going in one direction, and your RSI is going in another direction. Now, I think there's a divergence here, possibly. Sorry, this is. Really looking at this one, I can see some form of divergence here. Why? Because we're having a downtrend here, and this one is pointing down. Our trend line is pointing down, and then this one is pointing up. So this one also tells me there might be like a major reversal at this level. So I'll be waiting for a retest of this zone to take any entry. So basically, that's what like multiple time frame analysis is all about. Like combining, time frames to get your best entries. Now, if I take an entry here, like I already have this trade planned on weekend, so the only thing I'll be waiting for is just for this market to open and come and test this zone, and look for a bearish engulfing, or maybe a morning star, something that will just show me an entry. Now, where will I set my TP? To set my take profits for that particular trade, if I'm going to take it, I'm going to come to my higher time frame, which is the daily time frame, and then I'll measure a candlestick. I think you guys should know how to use like candlestick to take profit. Okay, this one is showing 187 pips, and I'll measure 150, just not to get too greedy. 150, right? And then I will have a line already waiting for me here. That's 107.517 or somewhere here. I have a line already waiting for me, and then I'll label this line. I'll label it see final target, or let's say TP2. TP2 final target is all the same thing. No, 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 not that. Sorry. TP2. So I already have this trade planned out for the weekend, and I'll just wait for the week to see how it goes. It might not go in the direction I'm saying, but with what I'm saying, I'm expecting like major reversals. So this is all multiple time frame analysis is all about. It's not so difficult. So that is that. In the next class, I'll talk more about chart patterns. So see you in the next class, guys. I hope you take something from this class. Bye.